Welcome back to Palisade Radio. I'm your host, Tom Bodrovics, and joining me today is Jim Paterson. He's one of the principals at the Discovery Group and the chairman and CEO of ValOre Metals. How are you today, Jim?
Hi, Tom. I'm doing great.
It's been a long time since we've had you on the show. I was just wondering if we could get an update on your view on the markets and what's been happening.
Wow. You're referring to a Palisade interview that I did several years ago on uranium. And a lot has obviously changed since then. Right now, there's total chaos and disarray in the general market. We were at PDAC in March, and everybody was talking about this virus. Nobody really knew what was going to happen. There were sort of those odd jokes on can't shake a hand, you have to bump elbows, and I don't think people really understood the magnitude of what was going to happen globally. And certainly no one had any kind of indication that the market was going to react as it did. I think that the exciting thing for people in the junior mining sector is just what's happened to gold stocks. And I have been investing in exploration companies for over 23 years now. And we were always looking for, gold bull runs because it trickles down into all commodities, and on the junior sector, it really helps. But right now, it's the gold market is fully on, tons of volume. People are looking for reasons to buy gold stocks, not liquidity events to sell. And we had a good laugh, Tom, you and I, about another interview I took where I said greed is good. But in this case, I guess what maybe I'll better describe people's attitude. It's like they're positive, they have hope, they're thinking that good news will lead to more good news, and not using good news as an excuse to sell. If I'm describing myself right, what do you think? Absolutely.
I think in the right circumstances, greed is only going to help all of us, and I think that's when the general investor and I believe Rick Rule says the taxi cab driver and the bellhop all start suggesting gold stocks to pile into, right?
Yeah, we're a long ways from there, but I think the next step is the generalist investor, and I don't exactly know the stats, but obviously the U.S. equities, the blue chips, they completely dwarf the junior mining sector, and they even completely dwarf the big senior gold producers. So those senior gold producers are probably the first move for the generalist investors, and I'm sure that some of them are coming in, what you'd call the early adopters. But the narrative in the general investment community isn't buy gold yet, and so the big funds aren't coming in. When they do, obviously they move into the liquid names first, like the big Barricks of the world or the Newmonts of the world. But there is a very active junior mining sector and investment community, and right now they're pretty excited. And projects in the gold space are getting funded. The stocks are trading up. Blocks are trading. Big blocks of stock are exchanging hands, and that always gets people excited. And I think what would be great as well would be some M&A, because I think M&A deals attract attention, bring the bankers into the sector, bring the ARB funds into the sector, and really increase liquidity and increase excitement. So that would be good that would be, I think, a next happening that would be very positive for the sector to have M&A increase.
Absolutely. A little bit more attention to the space would be great.
Yeah.
Being a principal of the Discovery Group, you're able to get eyes on a lot of different junior mining companies. What to you guys signifies a great deal and a great project? Is it more people? Is it jurisdiction? What are you guys specifically looking for?
I'm not a geologist, so I always look at the people involved first, because first of all, integrity, number one, and then relevant experience, number two. And I get PowerPoint decks sent to me constantly. People are saying, what do you think of this project? What do you think of that project? And the worst thing for me is to get some sort of PowerPoint deck with nothing on the people involved. Whether it's the people that have collected the samples, that has generated the data, or bought the project, or run the exploration program, or given their summary view on what they think, what their past experience is. I look really carefully at that when we're reviewing a deal, for sure, because when, the old adage, garbage in, garbage out, totally applies in mineral exploration. And if you have people that are not properly executing exploration programs, they will more than likely generate data that is faulty or misleading. Conversely, if you have really good teams out there, they're going to be able to find opportunities and generate discoveries. So it really comes down to people, for sure, with that relevant experience.
Turning more to how we're going to see things develop in the gold and silver, let's say, mining space going forward, do you think there's a lot of excitement there, and there's something that anybody is missing that they're not looking at going forward?
I don't know much about silver, which is kind of crazy. I'm fairly long what you would call the calls on SLV, which is an ETF that covers silver, but that's really my only silver exposure. And it seems, conventional wisdom is that silver moves after gold and it moves further. It kind of whipsaws, and that's what a lot of guys that I listen to on the internet or at conferences say. I'm hoping they're right, and I'm investing accordingly. I know a lot more about gold exploration, for sure. I don't think that people are really missing anything. I think everybody's excited about gold, the prospectivity of the gold price going up, and correspondingly the shares of those explorers going up. I just don't think that a major part of the global investing audience has moved into the gold space yet. And I think right now, what we're trying to do as investors, but also on the corporate side in terms of making acquisitions or thinking about M&A, we're scrambling to find the best projects before that tidal wave of investment comes into our sector. Because unfortunately, what happens is when you made that comment, Tom, about the bellhop or the taxi driver commenting on gold stocks, what also happens as a consequence of that is that there's too much money for an industry that can't handle the volume of funds. And so people in the space that don't deserve to be financed get financed to build projects that don't deserve to be advanced or built. And that money goes to money heaven. It gets vaporized, and thus the beginnings of the bear market start again. When you start burning people's investment dollars, they get frustrated and leave the space. And that always happens near the top of markets where really bad decisions get made because there's just too much money there yet, that's for sure. But I think it's time for people to be serious about the gold space and focus on projects that have resources or that are hitting development timelines, advancing projects and showing that they're moving things forward. And I think those companies will get rewarded. Whereas I was saying before, in the last few years, if you did something good, you were rewarded. The executives of the company were rewarded by seeing their share prices going down because they basically created a liquidity event for frustrated investors that wanted to get their money out of the sector. And that's completely opposite right now in the gold space.
Jim, do you think that this has been kind of a perfect storm right now especially for the gold space, as we've seen over 50% of the mines shut down in the world due to the COVID lockdown, and also the major bump up in physical demand?
Yeah, and also the many of the currencies of the world have been devalued as well relative to the U.S. dollar. So yeah, I would think it's not just a tempest in the teapot. It is actually a perfect storm, as you characterized it. When you look at the impacts of the virus on commerce around the world, there are certain products where demand has completely been destroyed, and gold is not one of those products. The demand has increased in this time. And as you mentioned, there's been significant supply shock or destruction because the mines have been shutting down, or there's a logistical challenge between the refiners and the market. So those things affect supply. And in some cases, some of the commodities, the demand has dried up, but gold is not one of those commodities. So you've got supply interruption, demand increase, and then you've got the currencies from certain nations falling in value against the US dollar and falling in value against the value of gold. And so their margins have grown tremendously as well. So you're going to get certain, I just was reading something recently about B2 gold and sort of record production and margins. And it makes sense because, there's an element there where their costs are going down because of currency devaluations, perhaps. The demand is going up, production's strong and steady, and the price that they can sell their product, which is gold, is going up as well. So that's a perfect storm indeed.
I think with their costs, another thing to consider would be oil going down precipitously as we've seen it, right?
Yeah, that's a good point. If on average, let's say a mining operation in the world, if 20 to 25% of the costs are in fuel, and the price of that goes down 50, 60, 70, 80%, I mean, for the most part, the miners aren't taking advantage of those negative oil prices that people were reading about, but still prices have gone down, and that's a big component of their operating costs. So yeah, margin went up again.
Turning a little bit to an energy market, as we look at the uranium spot price rise, I was just wondering if we could get your thoughts on that market. We've seen, again, tons of shutdowns there, and what's looking to be in the coming 2 years a real supply deficit.
Yeah, that's one thing too. I don't exactly know how much demand has been destroyed. If you think about a nuclear reactor, they won't be turning that off and on as easily as some other markets in the world. In terms of the demand destruction, I think it hasn't been that acute, although I don't know about some markets. If for some reason there was a reactor or two shut down, I don't know about it. So let's just say the demand remains fairly strong, and then you're bang on supply. The fact is, with uranium production specifically, it's fairly concentrated. And when there's high concentrations in certain jurisdictions, if one or two of those jurisdictions get shut down, in this case, the global pandemic just shut down operations, or curtailed operations in Kazakhstan, and shut down all operations in Canada. You've got supply destruction, and you've got steady demand, and the price has gone up accordingly. It's a complicated market, and I think what is the saying? Those that know it most, hate it most, or hurt the most. I'm not sure if that's the exact saying, but people like me who live and die for many years on the price of uranium, we were frustrated year in, year out by the fact that it felt like the market was turning and the next year would be great. And we haven't seen that yet. But what we are seeing is that the number of nuclear reactors in the world is growing. So there is demand. The supply destruction is real. That's happened right now because of COVID. But also we're drawing down on inventories, and there are some different elements to the market that a lot of people didn't really understand, like underfeeding. I would hope in a rising price environment, underfeeding, which is a form of secondary supply, may start to be reduced as well. And we've seen the price of uranium, the spot price anyway, starting to really move. And it has electrified a lot of the uranium juniors. Now we, ValOre, the company that I'm the chairman and CEO of, we hold the Anglac Uranium Project. And what we're focused on right now, though, is a PG project in northeastern Brazil. So we're not promoting the uranium story, but we've got a great asset. And to be honest, I have the patience to wait until the uranium spot price really moves before we start getting active again on that uranium project. I don't need to go out right now and dilute our shareholders to do exploration on the project this year. I think I can wait until the price of uranium moves back, and I think it's going to happen, but I can afford to wait until it actually does.
So at this point, is moving a project forward just hopefully a play for an acquisition for that property, not to necessarily to move it into production?
Well, we're an exploration group, so we really get value by when the market is robust enough that we can raise equity at non-dilutive pricing. We get paid, really, our shareholders get paid by us making discoveries and identifying new targets and building resource bases on the project specifically for that uranium project. And we were quite successful at that. But after year after year after year after the uranium spot price going down, some of our major shareholders got frustrated with that because they said, look, you guys are delivering on the exploration front, you're delivering great news, but the price of uranium keeps going down. And so each year you're effectively financing at lower prices, even though you're successful. So, I've taken that to heart, and I'm a big shareholder myself. I want to protect shareholders. So to answer your question, if the uranium price comes back, we'll be able to advance it. We'll be able to do exploration on it. We have done metallurgy. We've done a lot of work to that effect. We have a resource base. We've done 3 separate resource estimations. So we're not, back in headier times, we spent over $55 million on that project. So, we invested heavily into it. But my personal opinion is we have some time. If the uranium price moves back up, to get after it and take advantage of it. We don't have to get ahead of that curve. We already own the asset.
As we were speaking about demand and advancing projects, it makes me think of the PGEs, and let's talk about how demand looks. Is demand for platinum, palladium, rhodium, elements like that, is it going down in your view? Because a lot of car companies that make the catalytic converters where most of that stuff gets used, is the demand side of the PGE market going to be going down or up in your view?
Up until January, February of this year, I would say it was going up. Policies were dictating that they were loading more and more palladium specifically into these catalytic converters, which are effectively a way to reduce noxious fumes based upon the burning of fuels or gas in combustion engines. So, there was a future in that, and particularly the real growth was coming from places like China, where they were trying to adhere to these environmental policies. But after COVID, the honest answer I can give you is, wow, demand just got absolutely blown up. And I have absolutely no idea when that will return. I cannot prognosticate. I have a feeling, though, that markets like China will open up again, and probably faster and more expeditiously than the West. And so there potentially could be some demand renew there. But, we don't really know what car sales will be. And I can assure you that car sales in the United States won't be very good in 2020, at least the first half. We'll see. And, I think anybody can really follow auto sales, and, anybody who's investing in this kind of space for upside, I think if you're looking to trade based upon commodity pricing, that's a good market for you to follow. Follow car sales internationally and do your research there. What happened to counteract that massive blow up or destruction in demand, though, is the supply side, which you referred to with respect to uranium, and the same thing applies in PGEs, platinum and palladium production. We're highly concentrated in places like Russia, almost 40%, 39% South Africa, and about 5% Zimbabwe. So in South Africa specifically, there was a decree that went out, and they shut down all mining operations, which of course would affect the production of palladium and platinum pretty dramatically. And those things will be coming back online soon. But there was that supply disruption as well, or shutdown. So the prices actually remained pretty strong. They took an immediate hit when COVID was sort of, people were getting their heads around the effects, but they bounced back pretty quickly. So time will tell on that. I think, though, that the thing about being part of Discovery Group, which we talked about earlier, we take the long view. We've been many, many decades in the game. And just because the price of the underlying commodity goes up or down, we don't do flavor of the month type things. Like, I'm not looking for a commodity that's rocking or the price is really up for me to start a new company to take advantage of that with investors at all. That's not our style. And so we have to look at projects like our Pedro Branca project, which is in northeastern Brazil, the PGE project, the Platinum Group Elements project. Whether the markets are up or down, we have to be able, it has to be a good enough project that we can raise capital for it and advance it, exploration, discovery, moving the project along towards development in sort of good markets or bad. So first of all, I can't control the commodity prices. I can't control global demand for palladium, platinum, nor uranium, but we can control the quality of the projects we have and the jurisdictions and the teams and the potential upside, and those are the things we focus on.
Jim, you've got a lot of experience with projects in different jurisdictions. Could you give us a little bit of an overview on, let's say, the difficulties or the advantages of running different projects, let's say in Canada versus Brazil?
Yeah, it's quite different. It is quite different. I think there's certain elements that are the same, though, and you can rate them against one another. I think the rule of law, you want to be able to feel confident that if you do a deal on mineral tenure, you will be protected, your ownership will be upheld, and both Brazil and Canada are two countries where that's not an issue that we see at this time. That's very secure. Logistics is a big one as well. So we've done a lot of work in Northern Canada. We are certainly specialists in areas which don't have roads, or most groups would have challenges getting to. The thing about Brazil, and particularly the Pedro Branca project, we can drive cars right to the project, which is completely different than projects in Northern Canada. But regardless of where you are in the world, logistics is a major element of it. It'll reduce your costs or increase your costs dramatically. There's big swings based on logistics. And then also there's the cultures, the local cultures. And I don't mean ethnicity necessarily, but each area in the world has its own culture. They have their own attitude, whether it's in Appalachia in the United States or in Cambodia or Northern Canada or in Brazil. Even within the country, you can have wide variance in terms of the acceptance for mining projects. A case for that might be Argentina or Canada. And if you tried to build a uranium mine in wine country in the Okanagan of British Columbia, there's no way. In fact, there's certain people I know that knew that firsthand. Project was expropriated for that exact reason. Yet, if you have a uranium deposit in Saskatchewan, then there's going to be a lot more support depending upon where you are. So local cultures and acceptance of mining, and then looking at the physical elements as well. Are you near river systems? Is it dry? Is it high in mountains? What are the weather patterns like? So that's a long answer, but I guess the answer is each area is different. And it has major impacts on your project. So you better have the people involved with the project and the company that can help you evaluate.
Interesting. Jim, what would you say if someone were to criticize you because you guys have two very different focuses on your projects? If you aren't completely focused on, let's say, uranium or PGEs?
Well, I think if someone criticized me, I'd just roll into the fetal position and cry.
You need to find a safe space.
Oh my God. Yeah. Everyone in the junior mining sector has thin skin, so we can't take criticism. I think I wouldn't disagree with them. I think the reason why we did the deal that we did, so we spent a lot of money on Angelac, which is the uranium project that we have in Canada, and we invested it. We not only invested money, but a lot of energy and forging a relationship with Nunavut Tunngavik Inc., which is NTI, our Inuit partner there in Northern Canada. And we love the uranium project. We love uranium. We love nuclear. But there's only so long that you can say to shareholders, look, we'll do this thing when the uranium price turns around, but we don't know when that will happen. And to shoot straight, I got tired of making like the market making a liar out of me, because I was always optimistic, thinking things would turn around, and kept getting disappointed and in disappointing shareholders. And I certainly don't want to do that ever. The opposite. I want to reward shareholders for trusting us and backing us. And it was just challenging. So we're holding on to the uranium asset, and we will take advantage of that when the time is right. And we're a group that knows how to do that. In the meantime, I was looking for projects around the world that would fit the bill of what we like, which is that district scale potential, lots of money spent by previous operators, so significant capital invested in either infrastructure or data or exploration to give us that really good head start. And projects where we looked at the data and we could say, look, there's huge opportunity for discovery here if we get the right people working on this project and using innovations that weren't taken advantage of by previous operators. And so that's why we came up with this totally different project. That you're right to call it that, Tom. It's a different commodity in a different area of the world for sure. But when you boil it all down, there are certain elements that are the same regardless of the commodity if you are an exploration group like we are. Many of the things are very similar, if not identical, and it is absolutely our wheelhouse. So I wouldn't say it's too different. It's employing exploration programs overseen by high quality people and making good decisions and executing.
Any concluding thoughts as we wrap up here, Jim?
No, I really appreciate talking to you. I hope it wasn't too long and winding. I'd absolutely love it if anybody would like to keep up with Discovery Group. You can go to discoverygroup.ca, or you can go to valoremetals.com and look up the projects. We're completely available to talk to people. I'm proud to talk about the group and the ValOre story, and I appreciate the opportunity.
Absolutely. We look forward to having you on again, Jim. Just a reminder to everyone to join our mailing list so that you don't miss any of our episodes. That is at the top of the page at palisaderadio.com. Jim, thanks for your time today.
Hey, thank you.
Think you understand the junior mining sector, and you think that the participants in the mining sector, junior mining sector, are good people and kind people, hit the bid.
How violent that term could be, it actually could be quite violent. It could be a rip-your-face-off uranium rally.
And the world is always going to need raw materials. It's going to need copper and gold and nickel and so forth.
Totally destabilized. Hey, Troll, did you hear what's going on in Yemen?